I saw in the headlines yesterday something to the effect, Warren Buffett holding cash or going to cash. And the reality is, I think the way the media puts things out in general, and then the way our quick brains and we're all in a hurry, the way we perceive and read things, could read something like Warren Buffett went all cash. That is not at all what it said. But I had several people say, "Wow, did you see Warren Buffett went cash?" Um, Miles, any thoughts on that? I know what actually happened and what people were saying. Just when I was at the gym with my trainer doing a little workout in between meetings, I had a couple people say, "Oh, Warren Buffett went to cash," and I've tried to correct them.
Yeah, I feel like, his numbers are just so big. He's handling billions of dollars. And so it's like if he
Are they
sells
bigger? Are they bigger than yours, personal numbers?
maybe like a percent or two. But he's talking, so if he sells 300 billion of Apple stock or whatever the number was, that may only be a few percent of his portfolio that he's taking to cash. It's not like 300 billion is, David, to your point, he's moving 50% of his portfolio into cash. I think with where he stands right now, he has probably more cash than he has in the last few years, maybe 10, 15% somewhere in there. But if you know anything about Warren Buffett or what his investing principles are, I think it's a good bet that when he feels the market is at a good level, he's going to put that money to work right away. That's just his one-time tested principle is to, I think he even says it, when there's blood in the streets, he gets excited because he knows there's opportunities to buy. And that's exactly what he was doing. If you look at 2008, that's exactly what he was doing. He started buying a lot of stock when everybody was running for the hills and going to cash. He was buying, and that paid huge rewards to him over the next 15 years, 16 years from where we sit
think
today.
about it. He's looking at it and saying, all right, so cash now is paying, let's say, 4 or 5% plus. It's actually, not a bad place to sit when you have a stock market that's been hitting all-time highs. It's not as though he took his billions of portfolio and went all cash, trying to time the market, waiting for it to hit bottom. He's just maybe, reallocated, left a little bit more in cash. Maybe he's 85% stocks, 15% cash, maybe 5, 7, 8% more cash than normal, which is something we've done with some of our clients just in models, going a little bit more defensive, but just on the margin. Also keep in mind, again, like Miles said, with his numbers, he's getting new dividends and cash in all the time. And so he can accumulate cash, and he might have just decided, I'm not going to reinvest this cash for a year or so because I think there's going to be an opportunity to get in at a better place. But he is a buy and hold long-term investor. So just an example, my point of that is, without getting into the weeds of his portfolio, is what people heard and saw in a quick social media glance is.
Any opinions are those of myself and not necessarily those of Raymond James. Expressions of opinion are as of this date and are subject to change without notice. The information contained in these podcasts do not purport to be a complete description of the securities market or developments referred to in this material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Every investor situation is unique, and you should consider your investment goals, risk tolerance, and time horizon before making any investment. Prior to making an investment decision, please consult with your financial advisor about your individual situation. Any hypothetical examples are for illustration purposes only. Actual investor results will vary. Raymond James does not provide legal or tax services. Please discuss these matters with the appropriate professional.